Good morning, everyone. It's great to have all of you with us. You've seen us over the last 12 to 18 months roll out one blockbuster launch after the other in the auto space. We have 5 blockbuster launches now, the most recent one being the Scorpio N. And there have been a number of questions along the way on what's happening on the electric vehicle front. And we had promised answers to them. This is the start of the answers, which is we're starting with spinning off EV into a new company, a company that will have a valuation of up to $9.1 billion with one of the most reputed private equity investors in the world partnering with us in this venture. It is a venture that holds a lot of excitement. We will share more about the products that have been lined up on August 15th. But for today, the discussion will focus on this partnership and the path that we're forging ahead. With that, I'm going to invite Rajesh Jejurikar to take us through some of the details of this, after which Puneet Ranjan, who's been leading the deal, will come and talk about the specific deal details. Rajesh?
Getting the slide up. Good morning, all of you, and welcome, and thanks for coming in at short notice. We really appreciate you all being able to do that on a wet, rainy day in Mumbai for those of you who are here, and for the others who've also logged in the hybrid model, we appreciate your joining in on this conference call. I'm going to give you a little bit of a context. Anish started talking about our SUV business portfolio, so I'm going to start from there and talk about how our portfolio is looking at the moment. And as you can see out here, we've had very, very strong booking momentum and a very strong new launch, which has not yet started bookings, but is expected to continue the same booking momentum. You'd wonder why we're talking about this right now. We are, because this is a very important part of what we bring to the table when we think about an electric vehicle-driven or electric SUV-driven future. The fact that we are doing very well today is kind of represented in this chart. So on the right side, you see revenue market share for Q4, second half of the year. The numbers here are the second half of the year, FY22, where we have demonstrated an ability to be in the top of the pack, and that was with supply constraints and also without the Scorpio N numbers yet coming in. On the left side, we've segmented the market, and what you see is that we don't play in one part of the segment, which is the micro SUV segment. That in the second half of the year was an industry size of 14,000 units per month. Then what you see is the less than 4-meter compact SUV segment, and there the industry size is 51,000, and you can see the brands we have, and the full size SUV, which is 63,000 per month. We're very strong now in the compact SUV with the Thar launch, the 300 launch, the Bolero Neo, and the Bolero. With Scorpio N coming in, we would expect the greater than 4-meter SUVs to become stronger by way of market share. We've just put for reference below the number of brands, competing brands in each of these segments. And what you see in the last row is the success rate of other new launches. It's for the same period. So launches in the last 2 years, sales in H2 of F22, comparable period, average sales of new launches, 3,400 per month, 1,700 per month. And compare that with the kind of bookings that we are getting and the kind of sales that we are getting. Again, reinforcing that we really are now a very strong and formidable player in the SUV segment. The SUV segment itself is now a significant part of the passenger vehicle market. As you can see from SIAM projections and even where we are today, the SUVs as a percentage of total passenger vehicles in the region of 50%. So we don't play in a niche segment. We play in a very significant segment, which is the SUV segment. And in that segment, we are the number one player by way of revenue market share with a very, very strong portfolio. There are several reasons why SUVs are doing well. Clearly, consumers want stylized presence. They want that feeling of being in seating height control, newer tech, safety, greater performance. We believe the SUV electric segment is at an inflection point. These are very early days yet, but there are several pieces of data which gives confidence that electric SUV penetration will go up significantly over the next 3 years. And you see some data out there by way of what Niti Aayog has projected as the penetration, and also market research which indicates that 85% of Indians indicate a desire to move to electric, and that percentage is amongst the highest in the world. There are several enablers to that. There is the new launches that are coming up. There's enhanced charging infrastructure. There's multi-car households, government subsidies, better financing. And of course, one challenge is going to be how fast charging infrastructure actually does come up. We don't think it will affect our category as much because a lot of our consumers are actually multi-vehicle owners, and they will use flexibility on where they want to use their electric and where they don't want to use their electric when they need a very high range in case charging infrastructure doesn't come up. The critical thing is we are projecting for ourselves that by F27, we would get a penetration of between 20% and 30% of our portfolio, of our SUV portfolio as electric. At the higher end, that means assuming 30% penetration of our SUV portfolio, we would expect to be selling 200,000 electric SUVs in the year F27. Now, 200,000 may sound like a lot, but that's only 17,000 a month. And 17,000 a month coming out of a large portfolio which we will have by then, we believe is a very, very doable number. So really what has gone into the way we think about our electric strategy? At a fundamental level, we believe that we've now established with the new launches and the recent launches in SUV, a very strong technology capability. We've also established a very strong market position. So strong brands, strong technology capability, no reason. I'm sure you have lots of questions on our right to win, because we're not yet today talking about our brands, our platforms, and our technology when it comes to electric. But that day is not too far away. It's on 15th August when we are going to reveal our entire Born Electric strategy. And you have all the details you need to around why we have so much confidence that we will get to SUV volumes in the region of 20 to 30% of our total portfolio by F27. But we have an immediate launch which will come up, and in September of 2022 we'll reveal the XUV400, which will then soon after that go into production, and we'll start deliveries of that product in the period Jan to March of the calendar 2023. So that will be the first offer. We have worked a lot on this product, and we believe it is going to be a very strong offer in the market, very competitive, and it looks good as well. So that broadly is the setup for why we think we will be very successful in the electric SUV market. And I'll now request Puneet to come in and talk a little bit more about what went behind the deal and how the deal is structured. So, Puneet, please.
Morning, and thank you for coming to on this momentous occasion for us. I'll talk a little bit about the deal structure and the process we followed to get this investment from British International Investments. So I think first and foremost, what is most heartening for us is actually to get an investor like British International Investments to partner with us in our electric journey. If we look back when we thought about getting a potential investor, I can say with a lot of strong confidence that we couldn't have actually got a better partner than British International Investments. Not only because they are one of the leaders in private equity like Anish mentioned, but also because of their impact, global impact investing, as well as the traditional private equity mindset to which they did a very rigorous diligence process on our EV strategy, our EV ambitions, which Rajesh mentioned we will be speaking more on 15th August onwards. I think the second is, if we see British International Investments, various investments including in India, they're one of the largest investors in the whole climate space with multiple investments in renewables. And I think third and the most important and heartening space for us is this is one of their largest investments and commitments to the climate, and I'm sure we will see a lot more from them, and my colleagues from BI will talk about it. On the diligence process undertaken by BI, over the last few months we've had various extensive discussions with them on our EV strategy, our EV portfolio, the business plan which we've put together, which we'll be sharing in a few weeks from now. I think the second is they engaged Roland Berger, which all of you know is a global leader in consulting, especially focused on the whole automotive and the clean energy space. Roland Berger actually worked with them to identify what is the EV market potential, comparing M&M's electric products with other product offerings in the market, the competitive positioning, the capex plans which we put together, and basis that extensive diligence done by BI and Roland Berger on behalf of them, this investment proposal was put through, and I'm pleased to note that BI had got its investment committee approval to go ahead with this transaction a few weeks back. So talking more about the deal, like Anish mentioned, the valuation which we have fixed for this is 70,070 crores, which at current exchange rate translates to roughly $9.1 billion. The investment is going to be made into a newly incorporated EVCo, which we will be incorporating over the next few months. The EVCo will house essentially, it will basically be relying on the parent, which is M&M for contract manufacturing, but it will have its own product development, manufacturing and selling of four-wheeler electric cars. The existing ICE brands, some of which we might be using for the EV products as well, will be licensed to the EVCo, and all the EV specific brands will be housed in the EVCo. British International Investment has committed, like I mentioned, a total of 1925 crores. This 1925 crores will be invested in two tranches. The first tranche will be 1200 crores, which we hope to get as soon as we complete the regulatory approvals and certain conditions precedent over the next few months, but no later than June 2023. And then the balance 725 crores will be disbursed sometime in FY24 basis of certain other milestones which the business is supposed to achieve. M&M also, as its strong commitment, has also committed at additional 1925 crores to match BI's contribution into the EVCo. The valuation of 70,070 crores and BI's investment of 1925 crores will entitle them to a stake of around 2.75 to 4.76. They're investing in compulsory convertible preference shares, which will get converted sometime in post FY27, and that is the percentage ownership they will have in the company. The transaction structure, like I mentioned, M&M will invest 1925 crores, BI will invest 1925 crores in the EV. The total capex plan which we have envisaged between FY24 to FY27 for the first platform, which we will talk about more later on 15th August, is approximately 8,000 crores, and this 3,850 crores of total investment will be going towards funding that capex plan. The setup of the EVCo is going to be as follows. Like I said, all the EV specific brands will be owned by the EVCo. The EVCo will have access to the Mahindra brand on a license basis, on an arm's length basis, as well as the ICE specific brands. M&M, which is the parent entity, will continue to support the EVCo in various areas, for instance on contract manufacturing, the whole product development, product design, strategic sourcing from our suppliers, as well as certain other shared services. The total investment, like I mentioned, is around approximately 8,000 crores, and the funding will be a combination of this investment. M&M and BI will work together to get other third-party investors who are also very focused on climate, and we are very confident of getting that. They will come in future maybe to get be a part of our journey, as well as we can have other sources of flexibility on other sources of capital to fund the balance amount. The leadership and management of the EVCo will be as follows. The EVCo will be led by a leadership team. The leadership team will comprise of the current automotive and farm sector head, which is currently Rajesh, and he will be assisted in that through a management council. The management council will comprise of few senior leaders of our current automotive business, as well as there will be a specific CEO for the EVCo. And the organization, like I mentioned, will have the customary functions of sales and marketing, brand, customer service, and other shared services. That I hand it over to Anish.
The question that everyone often has is, how are we spending the cash we generate? And therefore, we put the slide here that we had shown in the last analyst meet that talked about the capex plans for auto as well as cash spent for other businesses. The one change that we have here now is with BII's investment, we will be spending 1,925 crores less. We had already outlined a plan where we had all the funding for EV laid out, and it was important for us to bring in a very strong partner to help establish the valuation of this business and help it grow going forward. Also, a partner who is very strong from a climate change standpoint, who we can work with closely to address climate change, which is one of our big priorities. And that is the reason we've decided to go ahead and take this step. But in terms of our cash flow, here are the details. We can address any questions that we have as we start the Q&A. But the more important part before we do that is I would like to invite Srini Nagarajan, who is the MD and head of Asia for British International Investments, to address us. Srini?
Thank you. I don't have the capability to talk extempore like Anish, so I'll open my iPad. Thank you, Honorable Deputy High Commissioner Alan, Anish, Rajesh, and the entire team for putting this wonderful show together. It's an honor to be here, and it's absolutely fascinating that we are now partnering with M&M. British International Investment till 4th April, before that we used to be called CDC Group PLC. We changed our name, and as you can see, the Union Jack is our logo now. Okay. India is a very important market for us, which is around 30% of our total balance sheet. We have invested around $2.1 billion in India. We continue to invest, and it's the most important destination for us. We've been here for 30 years plus. And it's a most important single market investment for us. Anish talked about climate finance. Yes, we are signed up to the Paris Accord, which means three things: net zero by 2050 or 2070. We are targeting 2050. It involves just transition, which we are talking about, which we are talking to the government about, because in South Africa there is a program called Just Energy Transition Program, which we are working closely with the government, and in India as well. The third one is adaptation and resilience, which means the loss of jobs, and it largely involves climate tech and reskilling people, which is an important component of it. Just want to say that we are a development financial institution where we strike a balance between being developmental and commercial. It's always a fine balance, but we always put our developmental goals ahead of our commercial goals to make sure that we make this world a better place. As you know, we are 100% owned by the UK government, and we are completely funded by British taxpayers' money. Our commitment to climate is around $3 billion globally, and you might have seen in the press that we have committed around $1 billion for India between our current strategy period, which is 2022-26. And EV is a very important component of that particular adoption as far as our climate strategy is concerned. This investment is in line with our commitment to UN sustainability goals and aligned with our Paris Agreement, which I talked about. As far as the transaction is concerned, first of all, I must say we are very proud to partner with M&M, who have got very high standards on corporate governance, ENS standards. Anish has announced his plans of going carbon neutral by 2040, which is extremely, which is the kind of partner we really want to work with, given our commitment to climate change. And BII shares a long-term relationship with Mahindra Group. We remember selling Punjab Tractors to M&M in 2007, and then we actually had a longer-term relationship with them, and this further cements our relationship. The new company will contribute towards 2.1 million tons of CO2 equivalent emission avoidance and lead to 8,000 skilled jobs, and of which a quarter of which will be women. So there are three main development impact themes which we are trying to focus on. One is we will build on the further excellence with Anish and team have built on the ENS side of it. We will focus on new jobs. We will focus on gender, where Mahindras are really showing a lot more excellence there. And finally, we will also help M&M Group to mobilize further capital on the back of this, because mobilization is a very important part of our entire development impact team. By promoting local manufacturing and thereby local suppliers, I think we are in a position to, we also create jobs through that, and of course reduce prices over a period of time. So generally at BII, we don't make passive investments. We play an active role and be much more complementary to where M&M has got skill sets. We're not going to tell M&M how to make EVs, and neither do we know. The areas where we have skill sets are ENS, gender, mobilization, and those are the complementary areas which we will work with Anish and team significantly over a period of time. So in substance, EV is a very important part of our global strategy, and climate finance is something we will continue to invest. And thanks to our shareholders, FCDO, for providing us the very, very continuous support in this, and to, of course, people like Alan and the team. Thank you so much. And lastly, I'm extremely proud about this opportunity. We at BII are looking at a longer term association with M&M on this. Thank you.
Thank you so much. We're going to open the house for Q&A. Just allow us a couple of minutes for us to do the setup while we do that. Thank you. Yes. Thank you. Can we have some mics in the audience? Yeah, thank you. Do we have a first question?
Hello. Congratulations, gentlemen, on this investment. Dr. Shah, my question is to you. Is this investment that's made only for the passenger vehicle, electric vehicle business? So does this mean that investments in other segments like EV three-wheelers will be through a different entity?
That's right, Sonia. This is only for passenger four-wheelers, and there will be a story in future for three-wheelers.
Okay, just a couple of more questions before I pass
Sure.
on the mic. You did mention that BII will initially invest 1,200 crores and the balance 725 crores on the EV company, achieving certain milestones. Are there any kind of targets or covenants for this investment to go through completely from BII's end?
There are no targets from a business standpoint, but there are certain things that we will discuss more before closing, and that may include like bringing other investors in, etc. So those are things that we will look at. Nothing that concerns us. It's very much on the path that we want to head down.
And will it only be restricted to a 5%, under 5% stake, or at some point in time would they look to up their stake as well?
So for that, let me bring Samir into the discussion. Samir is the head of equity globally for British International Investment. Samir?
Sure, can you hear me okay?
Yes, we can.
No, for now it is as noted, sub 5. That's what we have initial approval for. Let's see how the EV code develops, and we can always look at this again.
I'll come back again after.
Sure. We have a question here, and then we have two in the back. We'll go there after that. And
good morning, gentlemen. Sajid here from BQ Prime. Just a couple of questions here, one for Anish and one for Samir. Anish, what is the kind of asset transfer that will happen to the EVCo? Is it the EVCo will remain asset light in terms of you have a contractual agreement with Mahindra to produce or manufacture the vehicles, or is it going to be asset heavy in that sense? Because I think you've invested only 400 odd crores in this business. So in that sense, what is the kind of transfer that happens? And for Samir, how did you value the EVCo at $9.1 billion?
For the first one, Samir, if I may just take that first, let me actually hand it over to Rajesh for more details. It is asset light, but Rajesh will explain some of the details.
Yeah, so the way this is being set up is to fully leverage the synergies that already and the assets that Mahindra has. So there will be a set of set of related party transactions. Way this is being conceptualized is manufacturing will completely stay in M&M and will be a related party transaction. The sourcing, which is at least the non-EV part component, sourcing and price negotiation will also be done by M&M. The product development and technology teams, which is what are housed in a combination of 3 locations today. So we have Mahindra Research Valley in Chennai, we have an office in Detroit, we have a set of team in Bangalore, will all be service providers to the NewCo. So that would be another related party transaction. So the business would be very asset light. It would draw on the whole ecosystem of Mahindra, which is used Mahindra dealers. They could, of course, the NewCo could appoint additional dealers specific to electric business, but it will leverage the Mahindra system of dealers, the Mahindra system of suppliers, Mahindra system of financiers. So it fully leverages the current asset base that M&M has, and that's where really the cost efficiencies come in. That keeps the overall costs and investments under control because we are not recreating any assets and will be fully leveraging everything that M&M has.
Samir?
Sure, so the valuation was based on certain business milestones that the EVCo expects to hit in the future. As part of our diligence, we got comfortable. Sorry, you can still hear me?
Yeah, go ahead.
Yeah, sure. Sorry. So as I was saying, the valuation was based on certain milestones that the business is due to hit in the future. We, on our side, did a very extensive diligence to get comfortable with this valuation, which involved, as you can imagine, dozens of meetings with the management team, as well as work with all of our advisors, including Roland Berger. So we got comfortable with that valuation, and that's how the valuation was come up with.
Anything on the milestones which you're talking about? Because currently the portfolio is very thin for Mahindra and it's going to scale up over the next 3 to 4 years. So it's a future valuation which you're looking at. So what is the kind of expectation that you have from the EVCo in terms of revenues or in terms of cash flows or product which will be launched?
Yeah, I don't think at this point we're sharing the details. I think a lot of that will come through in August when the group does the full reveal, but it is based on future milestones, correct?
I'll just add on, the volumes that I put out there were part of what's gone into the business plan. So the business plan and evaluation input, not the only criteria, is the volume number that we projected, which is penetration of our SUV portfolio in the lower end at 20% and the upper end at 30%. Upper end of 30% translates to a volume of 200,000 per year.
And what would be the size of the portfolio that will be, which you're looking at? How many variants or how many products?
Yeah, so 4 born electric, we had that up on the slide, and the XUV400. So a portfolio of 5 products by F26, which would give us a volume of around 200,000 per annum in F27.
Thank you.
Let's go to Shrishti first and then we'll go to the back. Shrishti, go ahead.
Hi gentlemen, very congratulations on this deal. My question is on pricing, because going forward, like Rajesh pointed out, that 85% people are showing the willingness to get into the EV segment, and you guys have a good plan. So is pricing something that you guys will be focusing on, because even Scorpio had a very competitive pricing? So from the current market price that EVs are found to be a bit more costlier, you are trying to get it more cheap, and are you like that's something in your focus area?
Rajesh?
Yeah, Shrishti, a critical part of how we will create successes will be getting the right price points. Our assumption on what is the right price points is what has gone into the business plan, which has gone through due diligence, as Samir just explained, by the BII team and the consulting from Roland Berger. So it is a set of assumptions. Of course, the market will evolve. We're talking longer term, but the idea will be to hit that penetration range of 20 to 30% of our portfolio by F27, and we will enable that through appropriately priced offerings, which enables conversions.
Okay, and in the presentation also you highlighted that Mahindra has focused on certain SUV segments till now, and the 8 product launches that you are having. So is that an indication that going forward the launches and the focus will be on those areas and you will not be trying to shift on the others?
Well, at least the primary, and we'll actually share the product portfolio that is going to be in the first flush on 15th August, so just wait out for that. But they will be, the first lot of product portfolio is in the less than 4 and greater than 4 as the 2 pillars where we already have presence.
So just to add to that, Shrishti, yes, we will stay in the segments that we are very strong in. We are not venturing out in sedans or in the micro SUVs. And as you've seen from the recent launches, our approach has been to deliver a very high quality product at a price that the consumer loves. And that's exactly what we will do as we think about the EV range as well. Okay. We have a few questions in the back, please.
Hi, this is Kapil. Anish, my first question is to you. If you could just give some context as to what this investment does for M&M, because 2,000 crores is something which is at your disposal as well, right? So if you could give us some context.
So Kapil, let's go back to the genesis of this. Right? As we start the EV journey, there have been a lot of questions on, will M&M take leadership in this space? And in all the work that we've done, we are very confident that we will take leadership in this space. We've got a very good EV platform. We'll share a lot more details on August 15th. And as part of that, as we interacted with BII on a few other areas, they said, look, can we take a look at EV? We have the same mindset that we share around climate change, and we can be good long-term partners, and we really loved the idea of that partnership. And for us to be able to set a benchmark to say that, yes, we have an external endorsement of someone who is very highly reputed around the world, has looked at our EV plans in a thorough amount of detail, which obviously they would for an investment of this magnitude, and endorses it. So that is really the reason for that. This is also the starting point. This is not just one investment, but at the same time, we did not want to give away a lot of the company at the start, because we have a lot of confidence in this. So we will bring in more investors at higher valuations as we go forward.
Okay. And second question is regarding this investment itself. So firstly, we have already made 400 crores investment, and we will be making more in FY23. So will that be counted towards M&M's share? And for BII, for Samir, the question is that when you made this investment, is there some kind of exit clause? Is it for initial 3-4 years, or are you looking to be a long-term partner and you will participate in future rounds as well?
So on the first part, the assets that will be transferred in will effectively be the assets that have been built from what M&M has spent in F22 and 23. Because if we don't have the exact date for the start as yet, but let's assume it's the start of F24. Before that, whatever spent will get transferred into the EV. On the second part of the question, Samir, over to you.
Sure, I think as people may know, BII invests from a balance sheet. We're not a private equity fund, and therefore our horizons are very different. We see ourselves as long-term partners to Mahindra.
Okay, so you will continue to fund future investments as well?
As I said earlier, the initial investment that we've gotten approval for is the one that's being announced today. I think like all shareholders, as and when there's further funding needs, we'll take a look at it at that time.
Okay, great. Thank you.
Thanks, Kapil. Go ahead, and then after that we'll go to a few online questions. Go ahead, please.
Hi team, this is Vinay from Morgan Stanley. Congratulations on the deal. I'll save my EV questions for 15th August. We keenly await that day. But just going back to the deal, you mentioned that BII and Mahindra will jointly look for more investors, for like-minded investors. So what kind of a role will BII play in bringing investors? What's the target segment? Could we expect more UK-based government funds that go into the company? Any sort of a feedback on that based on past experience? And what timeline to expect for that?
Srini?
So as I said earlier, mobilization is a very important thing for us. I think it's very important that we get long-term investors who have a long-term vision about this business. As Anish rightly said, this is still evolving. Given the fact that we work with a number of investors globally, both from a sovereign wealth fund perspective, DFIs, like-minded investors. And I think what is important is perhaps to get much more patient capital, so that it helps the company grow over a period of time.
Let's go to a few online questions. Pramod?
Yeah. We have a question from Cyrus. He's saying, will the cars be badged Mahindra using the new SUV Twin Peaks logo, or will there be a different brand altogether, like Volvo or Mercedes?
The company would have flexibility to use current Mahindra assets, brand assets, for example, XUV, or if we were to do an electric Thar in future or an electric Scorpio, the electric versions of the iconic Mahindra brands would be available to the EVCo. The EVCo can also independently decide to create its own new brands, and those new brands would then be owned completely by the newco. So both, but certainly a starting point is the use of the Twin Peak logo with the carryover of the electric versions of the iconic brands.
Right. We have another question from Venu Gopal from Bernstein. He's asking, how does an EV subsidiary structure help apart from funding? What are the benefits on the tax front? As you have created a valuation benchmark through this, there will be a break-even, long-term margin and revenue scale target that would have been established. Can you please share these numbers?
Puneet?
I'll answer part of it and then hand it over to Manoj. So we are not disclosing in terms of what the revenues and margins, etc., will be at this stage. I think it does definitely establish a benchmark for our EVCo for future investments, as well as through the extensive diligence process which Anish and Samir went through about. And in terms of cash deployment, request Manoj.
So from a cash deployment perspective, as Anish mentioned also, I think we continue to invest in EVs today also, and some of those assets will move into the EVCo after we form it. And I think there was a question around tax. From a taxation perspective, I think it's more a vehicle to focus on four-wheeler EVs. I think that's the way to look at it. From a tax perspective, there's no distinct advantage, and all the benefits we are getting under PLI, etc., that will continue into the new structure. So I hope that answers the question.
I think we could take a couple from the audience side.
Hi, this is Jinesh from Motilal Oswal. My question pertains regarding non-SUV electric products. So why are we not including in this, especially ELCVs and E3-wheelers also would have similar impact on, particularly from climate perspective. So why BI did not look at that, why M&M not look at that? And second question pertains to CCPS. So any timelines for conversion of that into equity and any coupons on that? Thank you.
Rajesh, for the first
one. So on the first one, it's something we've thought about, and as we understand this business better, including the decision to recently, a year back, make last mile mobility a distinct vertical. We realized that the nature of costs and cost management in different business verticals is very different. The level of technology evolution that is needed to do a SUV high-end is very different. I'm not saying which is better, but is different. You need a different offering for a customer who's looking for a three-wheeler or a small four-wheeler last mile, from somebody who's looking at a mainstream pickup, from somebody who's looking at a personal usage lifestyle SUV. The thinking, the channel, the way you market, the way you sell is very different. And the only area of potential synergy is in the carryover usage of cells and cell, maybe battery packs in some cases, depending on the size of the platform. That synergy we will enable anyway, irrespective of in which company the business sits. So really, when we got into this, the thinking was, let's stay focused. Each of these business verticals has a purpose. We've been, in earlier meetings talking about the purpose of the SUV business. It is about creating authentic, adventure-capable vehicles, and we want everybody who works in that business to think along the lines of delivering that for customers, and not confuse that with then creating a product which is really about enabling prosperity for a customer, which is what the last mile mobility business is. So we really see this as very different business offerings, and we don't see value in merging it and defocusing an organization and people capability.
Yeah, can I? Yeah.
On your question on the CCPS conversion, the way we've currently structured the transaction is the CCPS are proposed to be converted after FY27, but we have built in the flexibility in case of certain milestones are achieved ahead of time, the CCPS can convert into equity earlier as well.
Yeah, Samir, anything you want to add to that?
Maybe just to say that, from our perspective, the other really important developmental aspect behind this transaction is to catalyze the market. As we talk about the automotive sector is an ecosystem made up of multiple different actors, and it really takes the OEMs who are the cornerstones of the ecosystem to catalyze the entire chain, from auto components to battery charging to the kit manufacturers to, at some point, battery manufacturing as well. So for us, it's really, really exciting to partner with Mahindra in an OEM, because it will then lead to the development of this huge ecosystem benefits with all of the attendant job benefits, which would all be sort of future-proof jobs. That was a really important priority for us.
Yeah, Ketan here from Economic Times. Just wanted to understand what part of value chain will Mahindra Group be participating in, as we just heard about, right from battery manufacturing, cell localization, how vertically integrated will Mahindra be as you look towards, a 2 lakh kind of volumes in the next 5 years, because costs are, cost is still a big challenge when it comes to vehicle acquisition. So how vertically integrated you're going to be, and are you going to be investing in cell localization and batteries, and what all part of the value chain that you'd be getting into charging infrastructure, and what's the plan on vertical integration?
Ketan, hi. Let's try and respond by eliminating some. No plans to invest in battery charging infrastructure. Enough people, at least at this point of time, who are going to do that. And we believe that there will be a strong charging infrastructure ecosystem that will get created in the next 2 to 3 years. And we don't see at this point of time value in diverting ourselves there. The rest of the decisions become the typical make versus buy decisions that any automotive company goes through. And that methodology doesn't change dramatically just because it's an electric vehicle, right? So should you make your own diesel engine, or should you outsource it? That's a commercial decision that you've got to make from time to time. And this is how it will be for cell manufacturing and so on. We have already announced that we are in conversation with an initial agreement with Volkswagen and maybe a few others, and we'll see how that plays out by way of plans to localize, etc. But clearly partnership will be the mantra there, and certainly not something we're going to do on our own.
Good afternoon, gentlemen.